What's up, guys? Alec back with the daily stock market, and I hope you guys had a great weekend coming off a winning week. I think we all had a great week last week. Here I have it pulled up 15% up, almost 4,800, almost $5,000. And in the last 3 months, we're up 26%, almost $8,000. And if we pull up that year chart, we're looking really pretty right now with a 99% gain and up $17,000. So what we're going to be talking about today is one of the favorite videos on the channel, and you already know what it is. Yes, it's the Sunday Stock Talk video with 10 different stocks on the list to be watching throughout the week with price points on what to be buying in at. We'll also go over if I think they have short-term potential or long-term potential and my plans moving forward with these ones too. So smack an early thumbs up on the video before it even starts. If you enjoy my content and are rocking with me, thank you guys so much for 10,000 subscribers on YouTube. So make sure to like this video so other people can see it, and subscribe if you are watching this video, or if you watched a few of my videos and it doesn't say subscribe yet, make sure you hit the subscribe button with the post notifications on, and let's get right into the video for today. So the first one we're going to be talking about, we're coming out with a banger. We got Tesla right off. And what I think about Tesla right now, a lot of people are asking me, should I still buy Tesla? Is it too late to buy Tesla? I was going to buy a whole share, but it already went up and I think it's too late. And I hear this story all the time, but if we always remember to zoom out when in doubt, and if you actually see they're still down 21% from their all-time high. And that means they need like a 30% gain to get back to an all-time high. Now, you guys know that I'm all about long-term for Tesla. Do I think they can go back down? Probably not. Maybe 650 if you're lucky, but I definitely want to pass that up. But you should be definitely looking at the long term anyway, and I think they can easily go back to an all-time high. So if you're looking for a swing trade, you can exit Tesla. Probably, well, I'm going to be exiting Tesla right around probably $850 to $900 a share. And I'm sure that $850 to $900 a share sell point for Tesla, I'm sure that won't be too hard to achieve in the short term because the stimulus being passed, a lot of retail investors and new investors are going to start pumping the market with some new money. And a lot of people, what is the first one they want to invest in is Tesla stock. So definitely be aware and ready for a spike, a potential new all-time high for Tesla stock in the next few months. And if you did want to see my Tesla position, personally, I have about $1,200 in Tesla, 1.7 shares with an average cost of $660. And we're already up almost 5% on Tesla. Looking for a nice gain here. So let's go to the next stock, which again is going to be in the EV sector as well. So the next stock that we're going to be talking about today is XPeng. And it's one of my favorite stocks in the stock market right now for the current price. And if we look at their all-time high, which is very potential for them to go there again, they're still from their all-time high down about 50%, right? 51%. And if you look at their recent highs that they hit this year, if we look at 2021 highs, on this one, they're still down 37%, guys. So this one's going to be an easy, in my opinion, a 50% gainer or an 80% gainer in my personal opinion. I am going to be loading the boat a little bit higher with XPeng, and I already have a large position in my Fidelity account also. Currently, we're up 14% on XPeng though, so we've already had some gains on XPeng. If you've been following the channel, we've been taking out some options on them also and got 100% gain on their option. But in reality, I think this is going to be another one of my home run stocks. Obviously, there is always risk with anything, so just take what I'm saying with a grain of salt. This is just what I'm personally doing. And I'm liking the electric vehicle industry right now in the stock market because they have been hit super hard. And the good thing about that is they are a long-term industry that you should be investing anyway, but there's also a lot of hype around them, so there's short-term potential also. So I'll tell you how I'm going to be playing XPeng. I'm going to be exiting majority of my position right around $55 a share. And then I'll probably hold a little bit even to $70, $75 a share for the long term on XPeng. All right, and the next stock's going to be NIO. And I promise, guys, this is the last EV we are going to be talking about on the list. But it is a sector that I am liking a lot right now, so I want to share. As you can see, they're up 22% in the past week. They've already hit a hot streak. And remember, don't just look at the last week. Always make sure you zoom out a little bit to like month and 3 month. But in the past month, they are down 26%, guys. And if we want to go from the all-time high, they're still down 26%. NEO's a stock that I think easily can get back to $60 a share, even if it's just based off hype alone. But the good thing about NEO is they're not just a hype company anymore. They've been putting out a lot of numbers to back up some of this hype too. Not to mention that China has a huge, huge market for EV vehicles in the next coming years. So this is going to be a long-term hold. Definitely should be a long-term hold. But if you want to swing trade it, I would probably be looking for $60 a share or $55 a share for an exit price. Look for about a 30% gain on NEO, which I think is extremely realistic. We're only down 1.6%. Average cost is $46. So I'd say anything under $45 or $46 is definitely a great buy for long term. Or even if I just wanted to swing trade it up to $55 per share. So the next one we have on the list is Palantir, ticker symbol PLTR. And guys, if we look at what's going on, they're up 13% in the past week. They're down 24% in the past month. So we have a big drop going on with this one. And if we go from one of its recent time highs, about 30% down from its all-time high. So I think that this is one that has some great swing trade potential, more short to midterm. If you want, you can try to buy it around under $25 a share. $25 a share is very realistic for Palantir because if you look at the support right now, the bottom one's right at 22. We have another one at 23 and then a third one at 22. So I think that this one, if you were buying closer to $22 a share, that's going to be the safer route. Overall, I think this one is pretty risky, honestly, but it's very realistic that it can get to $35 to $45 a share again. You can see my position personally, have $461, up 2%, looking for about a 30 to 50% gain on Palantir. And I'm holding this one again for short to midterm for a swing trade. So nothing long-term on this one like the other ones And that's what I really like about my trading style. You can see most of the time I'm holding for a long term on these companies, but I'm also mixing in swing trades for short to midterm. And even on the long-term trades that I do, there's often, that's sometimes when I get my most short-term gains. Like, for example, Tesla or NEO, even though those are long-term stocks, or even like an Apple or Amazon, sometimes you can get 30, 50% gain very quickly on those stocks, especially if you're buying during the dip, guys. One of the most important things to do in the stock market, in my opinion. So the next one on the list here is an interesting one. And if we go to the week, it's up 12%, 13%, and it's down 17% in the month. From its all-time high, look at that, guys, down 22%, and it's an ETF. So you definitely, if you are a long-term investor or if you're an ETF investor, you want to be buying this one this week. This is definitely a price point that I'm personally buying at. And I think it's a really good price to get in for a long term. It's a safer investment on the list. And it's going to be following some of that energy, clean, renewable energy, which is really going to be good for the next 4 years, 2 to 4 years, because Joe Biden's presidency, that's a big thing he wants to be focusing on for his election term. Now, I did stock up heavy on this one. I bought $1,000 to $1,500 during the dip on iClean. And I can pull it up on my Fidelity account, but we have about an average cost of probably about 25. So overall, this is going to be a long-term hold, and it's something that you want to hold in your portfolio for a long time, like we were saying before, 2 to 4 years. Definitely a longer-term hold. Put it in your retirement account, even if you have a Roth IRA. But it is interesting because maybe to even take an option out on, I might consider. Because if you look, they have cheaper options. Even if you go out a little bit further, they are cheaper options. And it's going to be following that EV market, the clean renewable energy market too. So if you want to ride them up, kind of like an XPEV also. And I think it can be a less risky option play too. So if you want another option video like we did last time, go ahead and comment below if you want more options. Leave a thumbs up also to know that you guys like this content. Now, the reason why I like to do options on ETFs sometimes is because, in my opinion, they're a little bit less risky because they don't fluctuate and they're not as volatile. Now that means that you might not get as much gains, like 1,000%, 600%, 300% gains, and you might be looking closer to 30 to 50% or even 60% gains. But I like to focus on the small wins, small losses is going to be better. Minimizing your losses and still get a 20, 30, 40% gain, that is definitely a win in my opinion. All right, so the next one a lot of people have been asking me about is Peloton Interactive. It's like an indoor workout equipment. Mostly girls use it, but a lot of guys use it too. With that being said, it is down 23% in the last month, guys. So it has taken a big spill. And if we go from its all-time high, down 33%. So in my opinion, this is going to be posing some great short to midterm, good swing trade action here. And I'll love to be buying anything under 115, honestly. 115, and if it dips down to $100, I'll probably load up a little bit more. Remember, guys, this is a stock that was $17 almost 365 days ago. So it has massive, massive movements. And I think that this one can easily get back to $150 a share again. So I definitely think it's realistic to get back to 145 to 155 with Peloton. And why I like this for short to midterm growth is because there's still a lot of hype around this company. And remember, a lot of the action that it had in the last 365 days was because all the shutdowns and everyone being locked inside their house. So they were ordering a lot of workout equipment at that time. So I think that it's not going to just head down and it's not just like a lost thing. I think it is going to be going back up to new all-time highs. But I think after another year or two of extreme growth, I think it's going to start plateauing and taper off and not be as an explosive growth company for long term, long term. Now, the last four on the list, guys, are going to be absolute bangers. So if you did stay to the end, here is your reward. And we have Teladoc down 31%. So that's a huge, huge fall because just to get back to its all-time high, which I think it definitely will be getting back to because this is going to be a future, this is an industry disruptor, Teladoc Health. This is a stock you might want to look into a little bit deeper because I think they are a disruptor in the healthcare industry. I think we can see 30 to 50% gains on Teladoc in a short amount of time and even more in the long term. So for them to be getting back to $250 to $300 a share, I think is very realistic in the next 6 to 12 months, probably closer to 6 months, but to be on the safe side. Teladoc user base and revenue have grown rapidly and expected to do so over the next several years through multiple channels. Teladoc is one of the most mature competitors in telehealth. See, telehealth is what you guys want. It's this industry. It's going to be huge in the future because people don't want to go into a doctor. They want to do it all online and on the phone. Leveraging its national scale and nimbleness to take advantage of the blind spot between cost-conscious players and sluggish providers. The company's robust platform efficiently matches patients with providers to avoid costly visits. So I am still doing a deep dive on them. If you guys want me to do a deep dive, I want to do it one on Teladoc and also DocuSign. I'll love to do that for you guys, and I'll go over like their earnings, their income statement, balance sheet, and kind of see how that's kind of holding up too. Now the next one's up is going to be PayPal. It's going to be a safe long-term bet, and it's going to be on fintech. And if you guys want me to go over fintech in a future video and compare them against their biggest competitor, which is actually Square, if you didn't know, remember Square owns Cash App and PayPal owns Venmo, if you guys didn't know. So that peer-to-peer payments is huge on PayPal owning Venmo and PayPal and Square owning obviously Square and then Cash App also. Now they are down 12%, and from their all-time high, they are down about 17% still. So if you're looking for a short-term trade, this probably isn't it. The other ones are probably going to be better for short-term. But for long-term, I think that this one can grow very, very significantly in the next 2 to 5 years. So if you're looking for a long-term play, this can definitely be it. If we start seeing PayPal catching some heat and some fire, you can consider an option on them because remember, they're on the safer side of a stock. They probably won't plummet down very rapidly. So they are one that you might want to consider an option on if they start catching some heat. Now, I think that this one in the short term can go back up to $300, and that'll probably take, in my opinion, 2 to 3 months to get back PayPal back to $300. And I'll do a video in the future where I compare this one to Cash App and Square to see who is better. We'll look at their PE ratios, their market cap, their volume. We'll kind of go over all that stuff, and then their income balance sheets to see who is the best one. Next up, we have Zoom, down 20% in the last month. And from its all-time high, it's still down about 37% to 39%, almost 40%. So I think that this is an amazing short to midterm, even a long-term hold if you guys want to go that route with it. I think that this one could be a 50% gainer easily, in my opinion. That's why I'm going to be buying under, listen, $350 a share. And we're going to be swing trading this thing up to $500 a share. And we're looking at least minimum for a 50% gain on Zoom, which I think is definitely very realistic. Although 60% plus gains are possible if you start holding for mid to longer term. Now, I did also post a video on, or an article on Zoom on Friday, and it said Zoom wrapped up phenomenal 2021 results, best performer from a large cap we have seen. To appreciate the achievement, each quarter of Zoom's revenue in 2021 equals the entirety of 2020. So the entire year 2020, they did more in each quarter so far of 2021 and one quarter of 2021. Zoom is projected to grow another 42% in 2022, and the core drivers are Zoom's video conferencing, which will be needed when offices open. Guys, that is going to be huge because as you see, there's a lot less traveling for businesses nowadays because everyone's using Zoom still to this day because they're just realizing it isn't worth it to hop on a flight, go to Tokyo, and you can do the same thing if you just hop on a Zoom call. And the last one to talk about, guys, is going to be another great long-term hold. Amazon stock, guys, down 6% right now, and it's going to be at $3,000 a share. What a bargain. And I would like to see it go below 3,000, honestly. But as you can see, I'm loading up. I have about $1,000, 0.3 share right now. So in my opinion, you want to be buying under $3,000. Well, at least I want to. And hopefully it'll even go as low as 2,500. I don't think it ever will because this is a beast. If I pull up their income statement, their revenues, it's ridiculous. They're growing by like 30% every single year, every single quarter almost. So if you want to look into the numbers of one or do a deep dive, Amazon is a great company to look into because their numbers are absolute beast. And that's why they've grown 445% over the last 5 years. And it's actually been validated that they actually have grown that much. So with that being said, you're paying a PE ratio of 73, which I think is pretty good on a stock like Amazon. You're paying a lot more for some of the other ones on this list that haven't done half improved themselves as much as Amazon has, with a market cap of 1.5 trillion. That's absolutely huge, 1.5 trillion. But the game changer for Amazon, which people don't realize, and I'll tell you why you want it in your long-term portfolio, is because I think in the next 1 to 2 years, or maybe even sooner, who knows, Amazon will split. And what happens when a stock splits, and what have we seen from Tesla and Apple and some stocks like that, is they rally and there's so much hype behind them because they go down to a more affordable price. So if Amazon split and you could buy Amazon for $250 a share or $500 a share or even $100 a share. Think about that. If Amazon split all the way down to $100 a share, how crazy people would be going and buying so much Amazon stock at that point in time. So if you have a long-term portfolio and you can buy fractional shares right now, you should definitely be stuffing it full of Amazon, especially if you plan on holding anywhere from 2 years to 5 years. If it hits under $3,000, that's when I'm personally going to be buying for Amazon. So guys, that wraps up the video. If you did enjoy it, please hit that thumbs up and consider subscribing for long-term growth. And if you want to learn from me more on a personal level and see my courses, that's a laid out program and it's a step-by-step, like learn this first, then we learn this, and this is how we do this. This is how you read a graph, charts, income statements, balance sheets, so on and so forth. go ahead and DM me on Instagram. If your profile doesn't look along the lines of this, you might want to reach out to me because I think we can work together and I can probably help you out if you develop a little bit more of a long-term mindset. Keep in mind, most of the investments I make, 60% to 70% are going to be for long term, but that leaves 20 to 30% for more short-term investments and short-term trading. And remember, this is not my only account. So you see my Robinhood account with 36,000, but I also have a Fidelity account with another 30,000. I also have a Vanguard account with another 30,000. I have a Webull account with another like 15,000 and a few more accounts too. I have a Coinbase account with 15,000 on my Coinbase account too, and we're green on every single one of these accounts. I've showed them off plenty time on the channel if you guys are new. If you're a little bit of an older subscriber, you guys have known, you guys have seen them. And my Webull account and some of my other accounts perform better than this account too, which is ridiculous and crazy to think about. So if you guys need a little bit more help, 27% in the last month. If we go to the year, we're almost 100% on the last year. And that was a big help of buying dips. Buying dips, buying dips, buying dips. How many times can you say it? And think about it. Guys, I'm here to show you how to make money, and I'm here to help you guys make money more on a one-on-one level where you can ask me questions every single day. So if you guys want to check out my close friends list, DM me on Instagram. We're up to 71,000 followers now on Instagram and 10,000 on YouTube. And you can click here. It says success number 2 and one-on-one coaching. You can look through those. And you can also click this one. That's going to be the third one. You guys probably won't see like the where it says the green close friends list because you're not on the close friends list. But you'll see success number 2. You'll see one-on-one coaching. And then this stuff's for the close friends. You'll see the close friends with the green star in the top right-hand corner. Those are for close friends list only, right? Which you'll get access to once you join. But you'll also see student success, and you can go through all these testimonials and see what people have been saying. You can ask questions daily. I respond every single day. So if you want me to look at a certain stock for you or ask a general question or just have a second pair of eyes and a second voice, that's what I'm here for. I'll send you over an application so that way I can help you out the best as possible. And then once that's all filled out, I'll send you over my website so you can actually check out exactly what we're going to be learning. And you can go through my website and see how everything works too. So guys, I'll see you in the next video. And with the $1,400 stimulus is coming, keep in mind, guys, that should be coming later this month or in a few weeks, probably around 2 to 4 weeks. We should see stimulus checks in our bank accounts, which is going to be very beneficial for a lot of people. And it's going to also be pumping the stock market at the same time, like we've seen in the past every other time we get stimulus checks. And this is one of the bigger stimulus checks. Remember, last time we only got $600 and it pumped the market. We're getting $1,400 this time, guys. So it's going to pump the market, and consider spending a little bit of that in the stock market and bettering yourself at the stock market and joining a program too and getting more help from a professional. All right, guys, I'll leave you guys with that. Something to think about with the $1,400 stimulus checks coming. Make sure you're at least spending it on stuff that's going to progress you in life and not stuff that's just going to keep you where you're at, like video games and alcohol and out drinking with the friends. And make sure you're saving your money and putting it into investments that's going to create more money and have your money work for you so you don't have to work for your money. All right, guys, I will see you in the next video. I hope you did enjoy it. Remember, don't time the market, buy the market. Peace.